What's up guys, it's Avery here. Having a good credit score is an important part of your life as well as an important part of buying a home. If you're going through bank financing and using a mortgage lender, you're going to need to have a credit score in order for them to know how risky of a person you are to lend money to. And when I was buying my first home, there was a lot that I didn't know about credit and getting a good credit score. And in today's video, I'm going to share with you what I now know, how to get a good credit score, and what kind of credit you actually need to buy a property. If this is your first time to the channel, or if you're returning and you haven't hit that subscribe button yet, go ahead and do so and hit that notification bell so you don't miss out on any tips for investing in real estate and things that you can do with your money in order to build your wealth. If you're going to be purchasing a home and using bank financing, the first thing that you need to have is a credit score. You're not going to be able to get pre-approved by a lender without that credit score. And in order to get a credit score, you're going to need at least one line of credit, and you're going to have 6 months of history with that line of credit. And the reason I know this is because when I first looked at houses, I did not have a credit score. I had only got my first credit card a month and a half after graduation, so I had to wait an extra 5 months until I was actually able to get a credit score so I could actually have a pre-approval and offer on a home. So my advice for those who do not have a credit card yet and are in school, please just go ahead, get a credit card, open something up that you're going to spend minimal purchases on, pay it off right away. Don't use it frivolously. Make sure that you're actually able to afford those things. Just get something like the Discover student card. I can drop it in the description below if you want to use my referral link. Help me out a little bit that way. And please just do that so you have a credit score. Even if you're not planning on buying a house, if you're going to rent an apartment, you still need a credit score so that landlord can run a credit check on you to make sure that you're going to be a good tenant. So please go ahead and do that. Be responsible with it. Don't make the same mistake I did and wait until I was finished with school before I actually got a credit card. There are a number of factors that go into calculating your credit score and having a credit report. But before we get into that, what number of credit score do you actually need in order to get a loan? So if we're looking at an FHA loan, because this is something that I talk about often on my channel, especially when you're planning on house hacking, and if you're unfamiliar with that, check it out up here or in the description below. But essentially, if you're going to be using an FHA loan, you need at least a 580 credit score or above if you want to be able to put 3.5% down. If you have less than a 580 credit score, you're going to have to put at least 10% down. And a 580 credit score is not particularly high, so it's something that you should be able to get to. And if you're going through a conventional loan, really you're going to need probably a bit higher credit score than that, as well as the higher you get, the better interest rates you'll have. So that's important to know. The better you are with credit, the better you are with credit cards, the bank is going to give you more favorable terms because you're more likely to pay them that money back and on time. But as soon as you get over that 750 range, the terms are pretty much the same and they're not going to get that much better. So 850 is the top score that you can get for your credit card. But once you've hit 750 and all you're interested is buying a bunch of real estate, it won't affect your score in terms of the investment and terms that you can get when getting a loan from a lender. There are 6 main drivers that affect your credit score. And before I get into that, one really big rule of thumb when it comes to credit cards is treat your credit card like it's a debit card, like you actually have that money. The reason why so many people go into so much debt is because of credit cards, because of lifestyle creep, because of scrolling through Instagram instead of smashing the like button on my videos and getting financially educated, is because they're trying to buy things that they don't have the money for to impress people that they don't care about. Make sure you're not one of those people. Don't buy dumb shit, as Gary Vee always says. Buy smart stuff, buy investments. Only use your credit card for things you can actually afford and pay it off right away so that you can have the best credit score so that you can actually get into buying these homes with a solid pre-approval. So the first thing that impacts your credit score would be payment history. And payment history has the largest effect on your credit score. If you go below 99% payment history, your score starts to go down. So make sure you keep that at 100%. And paying your credit card on time doesn't actually mean paying it in full. Even though I just said make sure you pay it in full and on time all the time, which has the biggest effect on your credit score, this bucket actually only means that you're paying the minimum off. But if you're only paying the minimum off, you're gonna have a balance on your credit report and you're gonna accrue interest. And credit cards typically have a 20% or higher interest rate number associated with them, which is a lot of money, and you can find yourself into a lot of debt if you're not paying off in time and in full. So really, the number one thing that you need to make sure that you do is when you purchase something, pay it off on time and in full. That is the biggest thing in order to get the best credit score. The next driver when it comes to credit would be your utilization rate. Your utilization rate is essentially how much of your credit are you actually using. So if you have a $1,000 line of credit and you use $500 of it, you have utilized 50% of that credit. And the lower your utilization is, the better your score will be. And typically banks and lenders like to see you keeping a utilization of less than 30%. So if you have a $1,000 line of credit, make sure that you're not spending more than $300 on that line of credit. And the lower it is, the better your score will be. And you may be thinking, well, I might as well make it 0, but how would I do that and then not use my credit card at the same time and make sure I can actually create a score? So when you're actually getting a credit score, or these Experian or Equifax or TransUnion or these other credit card companies are checking your scores, they're not doing it every single day. They're just going to be a random time during the month where they check how much of utilization you actually have on your credit. So if you pay your credit card off immediately after you purchase something, your utilization rate is going to look really low. So make sure, like I said, pay it off on time and in full. And you can have better utilization not only by spending less of the credit that you have, but by having more credit. So if you have a $10,000 line of credit and you spend $300, that's obviously going to be better and a lower percentage than if you had a $1,000 line of credit and spent $300. The third thing would be inquiries. On your credit card, in order to actually get a credit card or to get a loan, someone is going to check your credit and your credit report. And when someone checks your credit, it actually dings your credit a little bit. Now, people get really worried about this and think hard inquiries are going to have a large impact on their credit score, and they really don't. They're not going to have much more than a few point effect, maybe sometimes up to 10 to 15, but really it's only going to last there for about a year before it drops off of your report. And as long as you're not getting a credit card every single month and doing a bunch of things and getting a ton of loans, it's not going to have a major effect. And if you're applying for a home loan and you want to go to multiple lenders and shop around different rates, they're all going to check your credit. But if you do it within a 14-day time period, Equifax, TransUnion, and all these credit card companies are going to understand that you're just shopping around and looking for the best rates. So they're not going to ding you for 3 or 4 separate credit pulls if you go to 3 or 4 lenders. It's still just going to be one hard inquiry on your credit. But this is something that people worry about a lot. Really don't worry about it too much. In order to get a loan, you have to have it happen. So it's going to happen. Don't worry about it too much, and just be smart with how many credit cards and loans that you're applying for. The next thing to look at would be credit age. And credit age is something that you really just have to be patient about. You can't increase the age of your credit. You can't make time move any faster. You just need to have accounts, and you need to hold on to them. So as soon as you can, get those credit cards, get those accounts so that your credit age will get larger and larger as time goes on. So if you have a credit card that is 2 years old and then you apply for a new credit card today, it's going to take the average of that and have a smaller credit age. So make sure that you understand that, as well as the fact that if you close an account, so if your first credit card is 2 years old and then you get one today and you close that 2-year-old one, the credit age is now going to be only the one from today, and you'll have lost all of that credit age. So please don't close your accounts, especially if they're your oldest ones and if they're going to help your credit age. The higher the credit age, the better your score. The next thing would be your total number of accounts. And this doesn't mean that you should go out and apply for 20 or 30 credit cards and just go get an auto loan because you want to have a mix of accounts within your credit score. This just means something that you'll accrue over time. Just like with credit age, this will take time. It's not something that you should just force and make sure that you have a ton of accounts. Typically, banks and lenders want to see 3 to 6 different accounts, not necessarily different types of loans, but 3 to 6 credit cards and maybe some student loans as well as a mortgage loan, just so that there's a different variety so that they know that you would be someone who is good to lend to. And when I bought my first house, I pretty much just got 3 random credit cards, and they had a pretty small amount of credit, and I just made sure that I paid them off on time. And the credit card mix is not going to be insanely important right away, and something that will take you from that $750 to $850. It's not necessarily as important as paying on time, Like I said, when I had my first home, it took me 6 months before I actually got that credit. And in the first 6 months, I already had a 720 credit score, mainly just because I paid my credit card on time. I didn't have a ton of mix of accounts. I had a pretty low credit age. So these ones aren't gonna have as major of an effect, and they're something that you're gonna gain over time. The next thing that would affect your credit are derogatory marks. This would be if you went bankrupt, or if you defaulted a loan, like your home was foreclosed on, or if you have any tax liens against you. And obviously the more derogatory marks, the worse your credit score is gonna be, and pretty much you need to keep this at 0. Plain and simple, don't have any derogatory marks on your credit. Keep this one at 0 and you'll have a much better credit score. So those are the 6 things when looking at your credit report and your credit score and what lenders are gonna look out for. Make sure that you're paying on time and in full. You're keeping your revolving utilization under 30% of the amount of credit that you have. And then you're gonna have a couple of accounts open so that the lender knows that you're going to be someone who is good to actually lend money to and not risky. But like I said, paying on time is for sure the most important part. Keep that as a priority. Don't miss any late payments. Make sure that you don't keep a line in order to actually gain interest and accrue interest on your credit card balance. Pay it off and in full. Can't say it enough times. Make sure that you do that. Credit cards are obviously an extremely important part of buying a home because in order to get that loan, you need that credit score, you need those credit cards, you need those things in order to let the lender know that you're a worthwhile investment in terms of them being able to loan you money and get that money back. And as I mentioned, I only had 3 credit cards and 6 months of credit history when I went to buy my first home, and I had a 720 credit score by the time that my score was opened up. So it's really not that hard in order to get a score, and now my score has moved up into that 760 range, and it's not really a big deal now when it comes to getting loans for a home purchase. And make sure when you get those cards that you're paying them off in time and in full, and that you're not getting yourself into a cycle of debt. Many people get into a crazy cycle of debt with credit cards because they go out, pay for stuff that they can't afford, keep a revolving balance on their credit card accounts, and accrue interest at a 20% plus APR interest rate. And that is what is gonna totally ruin you. Please do not do that. That is the worst thing that you can do with your money. I hope this video helps you guys understand how to build your credit score and what kind of credit you actually need in order to buy a home. Don't forget to share with your friends, comment, like, and subscribe so other people can see this video so they know how to build their credit. And thanks again for watching, and hope to see you guys next time.